Excellent. I believe we're live. So let me say welcome everyone to Banks, Credit Unions, and Crypto, defining a roadmap forward to implementing DLT and digital assets. I am James Wester. I'm the Research Director for Cryptocurrency at Javelin Strategy and Research. And I am very excited to be the host and moderator for the next hour or so while we discuss what I think is a pretty big topic, the growing interest and adoption of digital assets, crypto, and distributed ledgers. I'm going to introduce our panelists here in just a moment. Before I do want to take a moment to offer a little housekeeping. At the end of the panel, we will be allowing some time for your questions. So during that Q&A session, if you want to enter questions on the Q&A tab, please do, or even throughout this webinar, you can enter those if there are questions that you want us to address at the end, and we'll do our best at that point. Also, this webinar will be archived, so if you do have to drop at some point, you will be able to watch the archived version, and I believe a link to this will be sent to those people who have registered, so you can click on that as well. And with that, I'd now like to get to our topic and our panelists. Here's the thing, so as a sort of introduction of myself, I got my first question as an analyst about Bitcoin in 2012 or 2013. And the question I got, I still remember it was, what do you think about Bitcoin? And my answer was, I think it's interesting, but I think enthusiasts need to take off their tinfoil hats. Now, at the time, it got sort of the appropriate chuckle, but I kind of cringe a little now thinking about that answer because, you know, it was a fringe topic for a fringe crowd. But if we fast forward to now, we have serious institutional interest, we have serious institutional investment, and we have serious institutional knowledge about cryptocurrencies, about digital assets, and about that underlying technology. So, you know, the idea that these things, cryptocurrencies, digital assets, decentralized financial services, or DeFi, are going to be a part of the financial services industry, it's now very, very real. Certainly, there are a lot of issues. The path from my sort of joking answer 10 years ago to now has not been smooth. And that's, I think, what we're going to discuss today, as well as how banks and credit unions really should be thinking about crypto right now. So as I introduce our panelists, what I would actually like to do is, Caleb, if you could put up the first poll. We're going to start with a poll, give you a chance to answer the poll while I introduce our panelists. And the question is, how familiar are you with crypto assets and blockchain? So let folks answer that while I introduce our panelists. We have Kian Sarreshteh, the co-founder, chief executive officer, and president of CryptoFi. We have Pierre, innovation principal at Finastra. We have Jordan Bregman, director of business development at Chainalysis, and Jesse McGannon, vice president, crypto advisory services for strategic resource management. So my first question to my panelists is, did I get everybody's names right, and did I pronounce them properly? That's the biggest hurdle for a moderator. I'm done at this point. Once I get your names right, everything else is smooth. So let's give everybody a couple of seconds now to answer, and then I will end the poll. Gives everybody a chance to come in. Okay. And so I am going to, let's share the poll out. And it looks like the answer is, the biggest answer is, I read a lot about it and I understand it well. We also have a few folks who consider themselves an expert. So I guess my first question to all of the panelists, you all deal with financial institutions, you've been in this space for a long time. Does that sort of comport with where we think the industry as a whole is, where we have people feel like they know what is going on with crypto and digital assets, but we still have a large education gap that we need to address? So Kian, actually, I'll start with you since that's the way it is on my screen. I'll go Kian, Jesse, Pierre, and Jordan. Do you sort of feel like that's where we are, or where do you think we are in terms of?
Yeah, I think it's matured quite a bit since we first got started at CryptoFi close to 2 years ago now. You know, in our early days, which was late 2020, when we were having initial conversations about crypto with bankers or credit unions, most people didn't want to even have that conversation. And I think, you know, over the last couple of years, we've seen the institutional adoption and support of cryptocurrency to the point where I think now most people from banks and credit unions are at least aware that cryptocurrency should be on their radar. And as such, I think, you know, education has also evolved. I think people have been proactive, more so probably in the last 6 to 9 months, and taking it upon themselves and getting themselves up to speed on what they need to be aware of, as it is inevitably going to impact the traditional financial services industry. But I'm sure Jesse has more thoughts on that as well. So go ahead, Jesse.
Yeah, I fully agree, and I think it's changed dramatically in the last 2 years. People have really been focused on this, been top of mind. I think if we're looking at the bank and credit union industry, I think there's a solid 25% of forward-thinking, innovative, friendly institutions that really have been focused on this and understand it. And there's still probably a large chunk of them who don't. I still get questions all the time on, people thinking this is something for criminals and it's a way to buy drugs on the dark web. And I think the other part of the market that's really important, that we have a mixed bag of understanding on, is from that regulatory and compliance side. And so I think we're seeing more and more activity and focus there, hopefully by the people that do have a good understanding. But I think that we still have a lot of regulators and regulatory bodies that are still trying to play catch up right now.
So before I go to Pierre, let me actually ask you this question, Jesse, because I think you guys may have sort of an interesting insight on this. Where are you seeing that requirement or request for information and learning coming from within, say, a financial institution? Are there particular parts of a bank? In other words, is it coming from a product side? Is this coming from just sort of, CFO saying, hey, I really want to learn more about this? I'm kind of curious where that's coming from.
It's interesting because we're in a world where executives at banks and credit unions have increasingly new titles. And so we see lots of things like chief innovation officer. If that's a thing, then that's often where the interest is coming from. Chief experience officer, chief product officer, all those type of areas. I think it's typically the product part of the organization that's driving this. Interestingly, it's actually rarely the IT part of the organization driving it. For them, they're more focused on keeping the lights on and bringing in other types of technologies, sort of unrelated to crypto, but really it's that opportunity to launch a product that may resonate with an audience that's different from the prototypical community bank and credit union audience.
Interesting. I may stick a pin in that one because I think that may be a topic we want to come back to in terms of bringing other parts of a financial institution up to speed. So Pierre, same question to you about education and interest from financial institutions and what you're seeing in terms of the financial institutions you're dealing with.
So I think the interesting part that you can see from financial institution is that, yes, they are getting more interested, but mostly their members and customers are getting more interested, right? So it's not only that they were interested in the technology itself, right? Is it a new asset? What can we do with it? What is the purpose? So now they realize that some of their existing assets are moving towards crypto with or without them. And so the question is more like, okay, my customer want that. How can I start tackling it? And it moved from crypto is something that's on the fringe, that might be interesting, that could be even an investment tool, governance tool. I don't know exactly yet, but it could be something interesting, even lending, right? Better return lending, to, oh, I need to get into this now because all my customers are asking for it. And I think we all learned a lot, and especially banks and credit unions learned from the little crash that happened before, right? We had a lot of bumps in the crypto market where it stabilized more. And the volatility that used to be very extreme is kind of narrowing down. We're getting closer to real assets, and that brings less fear from the banks, but less fear from the customer as well. And so it's really a customer-centric driven approach, and saying, okay, if we want to be able to tackle the need of our customer, what do we need to do next? We need to be in this space. So they're trying to look for education, but also the space is evolving very quickly. And if you think about the decision-making system inside credit union banks, are usually very slow, except for a few, again, banks that are like very innovative and quick. So how can they tackle this space within their existing cycle is a big problem that they are trying to face as well.
Interesting. So I kind of want to come back to that too, about financial institutions being dragged into this by their customers, because I think that's an interesting thing that we're gonna start talking about too. Jordan, I'm gonna throw the same question to you, but I have a feeling that you're gonna have a very different perspective from how financial institutions are talking to you all and what their education level is and interest is, because the idea that it is just about criminal activities or buying things on the dark web is still pretty prevalent in, I know, the sort of civilian world, the non-financial services world. But I'm wondering if it's also the same in even the bank world, or if that has been dispelled. So I'm kind of curious about the education level of folks that are coming to you guys.
Yeah, and let me start by saying, first of all, there's a general consensus on this panel that we've come a long way over the last few years and seeing that interest and appetite grow from financial institutions, right? And I think there's also consensus that we're still in the early innings. You have your trailblazers that you've seen when you look at banks like Silvergate or Standard Chartered that have been engaging with the crypto ecosystem for many years now, right? But particularly in the last 1 to 2 years, we've seen a much broader stroke of financial institutions, such as large banks, beginning to get more comfortable with Bitcoin, beginning to come to market with custody offerings, brokerage services. And I expect that trend to continue exponentially, right? And as part of that journey, education is a huge piece of it, right? And given our focus on what we do at Chainalysis, there's often a lot of education around what are the potential risks and concerns from engaging with digital assets, right? Are there ties to sanctions or scams or ransomware? And one of the beautiful things about blockchain tech is that you have an open, public, permissionless ledger. And by some of the properties of that combined with tooling available in the ecosystem, you're able to shed a lot of light and provide a lot of comfort in what is potentially illicit versus what is not, right? So there's some interesting things out there. And from a crypto crime type of perspective, we release an annual report every year, and the amount of illicit activity actually tied to crypto transactions is well under 1%, which is much less than what people perceive. So I'm sure we can expand on that more later, but
yeah, no, that one little tidbit of information I do think is sort of interesting when you talk about education and talking to people in financial services about crypto and digital assets and where this is all going. That is that one piece of information when they do come at you with it's all about drugs and guns and the dark web. And when you say, well, when it's actually less than 1%, when you start measuring the actual bad stuff in basis points, I think that is getting that type of education out there, I do think is really important. So we've established that, yeah, there is, and I agree with you. I think that we are in the early innings, so there's a lot of education to go on. So I'm going to sort of throw this out there, maybe a little bit of free for all for a bit, but who wants to take a crack at explaining then why, especially for today's audience, why banks and credit unions should be paying attention to crypto? If it's in the early innings, why should they be paying attention to it now? So I'll throw that out. I'll see who shouts first.
Yeah, I'll take it. And so, from my perspective, I think if you look at the demographics of banks and credit unions, particularly the smaller community banks and credit unions, they are aging out, right? They are reaching retirement age, and they've really, really struggled to attract some of the demographics of the millennials and the Gen Z. And so, not that crypto is the one-stop solution to solve that problem, but I think we're seeing a general strategy of how can we offer products and services that are more relevant to that generation. And so, as we've seen in crypto, the younger generation tends to have more of an interest in it, more of an understanding in it than at least, compared to Gen Xers and baby boomers. And so I think as you looked at it as a way to remain more relevant with those generations and not lose them to the likes of Robinhood and all these other fintechs that are popping up and neobanks that are competing increasingly in traditional banking services, I think that we've seen community banks and credit unions really looking to diversify their product set, then find ways that are more relevant. And I think crypto is one of several ways to do that.
That's interesting. So you're seeing it more from sort of that retail investment side. So curious if anybody else is seeing it elsewhere or is seeing the same thing.
just to piggyback off of what Jesse's saying, and I think, Jesse and I are having similar conversations with banks and credit unions. I mean, I think it really starts with addressing the initial use case that they're losing customers, members, and capital for, and that is not offering today, at least, or most banks and credit unions don't offer the ability for their users to buy, sell, and hold crypto natively from their existing banking apps, right? And so, a lot of the banks and credit unions that we talk to are studying the amount of capital flight that's leaving, going to, let's say, a Robinhood, like Jesse mentioned. And what's interesting about companies like Robinhood is they're continuing to iterate on their roadmaps to where they're not offering, maybe just crypto. Robinhood started off offering stocks, then crypto. Now they have a checking account product, a debit card, and the banking services that they're going to continue to offer are going to continue to, take away the engagement and capital from traditional bank or credit union's existing user base. And that I think holds true with a lot of the fintechs that are now competing in this space, like SoFi, for example. If one of your credit union members transfers crypto or cash over to SoFi to buy crypto, they're probably going to get their loan with SoFi as well, right? And so I think we look at the retail buy, sell, hold investment side of crypto as use case number one. But I think it's important, and part of the reason why I'm excited to be on this panel with the folks today is to explore, what that version 2 really is going to look like, because Robinhood started off by not allowing any crypto deposits or withdrawals. Now that's going to be part of Robinhood's long-term strategy, is to be able to provide a competing service to the more crypto native exchanges that are out there. And I see the same thing happening in the banking and credit union space as well. If you cannot offer the ability for your users to be able to deposit crypto, withdraw crypto, it's going to be tough to remain competitive. So there's a lot of features on a roadmap that need to start being, discussed besides just buy, sell, hold. And just taking it one step further, part of what we're doing at CryptoFi that we're really excited about is our relationship that we have with Finastra, in the sense that the APIs that we built for the retail side of buy, sell, hold can also be applied to do more of a corporate crypto function by allowing, let's say, a bank to accept Bitcoin as a payment and then auto convert that into fiat. There needs to be this bridge from going from TradFi, and I think we're pretty far out from going to a full, DeFi native environment across the banking landscape. But some of these things to allow banks to slowly get there by accepting Bitcoin as a payment. There's a big aviation bank that has gotten a lot of requests from their customers who want to buy airplanes with Bitcoin, and they don't want to keep crypto on their balance sheet. And so thinking through some of the ways where you can listen to the customer, provide the services that your customers are asking for, I think is important now, because if the banks don't start thinking about this, they're going to continue losing customers, not just from a retail standpoint, but also from a corporate standpoint, as there is already third-party competition being accelerated for crypto payments, for example. So I think that's an interesting topic to keep in mind as we're thinking about the overall crypto journey for a bank or credit union.
So first, I will say, being able to buy an airplane with crypto, I'm totally like, that's not something that I would think to do. I'm clearly hanging out with the wrong people. But I do think that idea of, well, let me ask this question, kind of a little bit provocative question, given who probably is in our audience today. But, the idea being that maybe a credit union or say a regional or smaller bank, smaller tier bank couldn't do this because they're either, not innovative enough, or it's too difficult. Or I'm curious, Pierre, maybe you have an answer on this one, because I know you're dealing with a lot of those financial institutions. Others may have a view on this, but is this even something that a credit union could do? Is this even something that, say, a smaller financial institution could do? And if not, what would we need to make that possible for them?
Yeah, I think there is a lot to unpack here. I love Kian's transition from retail to corporate world, right? Because in the end, the traction starts with the retail customer, but a lot of application go into the SMB world, right? And basically, how can you cross-border payment, for example, using crypto? Or how can you move money in a more efficient way, in real time, right? If I need to get some stuff shipped somewhere, I want the money to come as fast as possible. Crypto is a solution for it, right? So there is a lot of use cases that come around it. And I think the interesting paradox in this is that banks are the center of trust for everybody. As a user, I trust more the bank than Coinbase or than any other app. Yet I'm willing to put more money on those apps because they're the one that can serve a purpose that the bank cannot. So it goes to your question, James, which is like, so what can financial institutions do, right? How can they help their customer? I think it's by being the center of trust and the center of information and a gateway toward this kind of buy, sell, hold that we're talking about. And again, this is, again, as Kian was referring, this is what we call step one, right? The basics, the buy, sell, hold, because there is way more that you can do with crypto. Cross-border is one, but there is also governance, lending money, and so on. That there is a lot of potential, but you need to start somewhere. And I think the buy, sell, hold will allow financial institutions to become again the center of gravity, center of trust, to be able to manage your entire assets. So this is the first side, both for SMB and retail, but it also gives financial institutions a better vision of the portfolio of assets that they currently own, right? Because they see assets getting away. Kian was mentioning, Jesse was mentioning as well earlier, where it's not only getting new customer, right, that are maybe more risk prone. If you think about the older population, more risk adverse, younger population, more risk prone. That's why they are the first adopter of crypto. Not only getting into this population, but what about the existing customers that are moving assets away towards the Coinbase or Robinhood, right? What do you do with that? What if you can get visibility again towards those assets so you understand what's happening? Where is the money in? Where is the flow is going? And that starts with the buy, sell, hold, right? And if you have this capability coming in, then you can start building on top of it. So I have an echo.
Interesting.
Okay, I think it's over.
There you go.
So
that last point was so good that technology wanted to make it again and again and again.
I want to hear it again. Yeah. But I think it's really important for bank and credit union to not feel like, oh, there is nothing I can do about it, right? I used to be the center of trust. You are still the center of trust. And the question is, how can you provide buy, sell, hold to basically bring back this center of trust for you? The customer will always, and members will always trust you more than Robinhood. And that makes sense. You've been serving there and the previous generation for years, right? And you are FDIC insured for a lot of things. So how can I move some money, make sure that I can move into this space in a safe way?
Yeah.
And banking.
So that actually brings up, I think that brings up a really interesting thing for us. We have a second poll, as a matter of fact. So it's a great segue into that. So can we bring up the second poll? I'm curious to know where audience members see the most value. So where do you see the most value in crypto? Is it crypto trading? Is it lending, access to capital, the mutability of transactions or cross-border? And there may even be some more, and we can talk through those, but I'm always curious to see, where do people look to crypto right now? And I do think it's also a part of the maturity of the market.
Hey, James, really quick, just adding a point to what Pierre was saying around buy, sell, holds. I think it's important for attendees to understand that there's a whole ecosystem of technologies and service providers that are there to be able to give you the technology or services to engage with this space, right? If you're looking at the buy, sell, hold example, there's different models for if you want to use, registered custodian to, help with buy, sell, holds, or manage that infrastructure on your own. And there's providers out there that will provide wallet infrastructure and things like that, where you can manage your private keys. So there's different routes for these and different technologies and ways to go. But a lot of this infrastructure has been built and continuing to be built. So
that's really interesting, because I do want to get into that, because I think that's an important part. What I find fascinating about this poll is there's nobody, no one answer where everybody said this is where we really need to be. That seems to be, I think, if you look at the maturity of these answers, kind of a bell curve of where are we? Well, we're at, crypto as an asset. Let's just start with retail trading. Then we begin to look at that expansion into, say, something like DeFi, and then a use case. I find it interesting that cross-border is the smallest one, only because I think that's been the use case that we've talked about now for probably the longest time, which is using crypto as a tech for cross-border. So very interesting. I find that interesting that our audience today is all over the place in terms of where they see the most value. But I guess what I would where I would go now is, so Jordan, you mentioned there are, vendors that can help with this. Pierre, I know that Finastra being one of those vendors, Jesse and Kian, I know you guys are also on that list of vendors who can help make this happen. But there are also some very big questions, I think, that need to be answered about crypto. And I know that there are some from the questions and answers that have already been submitted. There are some real concerns about for a credit union or a bank in dealing with this. And as I said at the very beginning, it hasn't been a smooth road from 10 years ago when it was sort of a fringe topic to now we've got institutional interest. So I guess my big question is, are there any things right now that any of these concerns, volatility, criminal enterprise, any of that seems to come up the most that all of you would like to address, or maybe there are some that haven't been. So I think I can't remember if Jesse or Jordan had mentioned, compliance and regulatory. So I'm kind of curious, what's the one big, huge issue and concern that you're seeing it's almost universal that we need to be talking about?
To me, the concern that I would have if I put myself in a call it credit union CEO seat is what happens when we go through something like we just did over the last 6 months.
Yep.
And God forbid it happens right after we launch this program. It feels like we're offering this service now. Our customers can trade Bitcoin or Ethereum, and all of a sudden 60% of the market gets wiped out, or 40% of the market, or whatever it may be. And they come to me and they say, well, I just lost a bunch of money. Why did you, as my trusted financial institution, give me this service? Or even worse, the interpretation is recommend I do this, right? And so I think that's where the training to staff is critical, making sure, at the same time as I give that example, we also allow our members to go to the casino and withdraw as much money as they want from the ATM and go gamble there. And so, it's not really a financial institution's place to be dictating what is or is not a smart investment. We let people invest in whatever they want to. And by no means am I saying that crypto is not a smart investment. But I do think that there is a lot of training that needs to go to the staff that comes along with this, that's saying, hey, we are not giving advice. We cannot be in the position of making recommendations. Oh, I really like this Dogecoin. I think it's going to go up. I made a bunch of money on it. You can make money on it too. It's just it's playing a different role and facilitating a different service than many financial institutions are used to. But I do view that as, again, if I put myself in that seat of being the CEO, and what I'm worried about a bunch of my members losing money and coming to me and saying, why did you allow me to do this?
It's interesting because I do think that may play into the discussion we're having about regulatory. What happens when, the regulator, CFPB, or somebody comes in and says, you need to be responsible for that. Or you need to be responsible for things like somebody storing, in some cases, a bank or credit union may have, they may be the funding mechanism for an exchange. And so you need to be responsible for somebody's private keys. You need to be responsible for somebody losing that. So I'm curious, is there something about, services like custody? Are there services like that financial institutions need to be at least aware of and maybe even concerned about? Because those may be things that are thrown at them because they are so easy to regulate.
I'll jump in on that, James. So, I think this goes back to the overall roadmap as well. And I think the easiest solution from a compliance and a reg standpoint to launch out of the gate is buy, sell, hold. Because if you're not allowing the crypto native transactions, meaning you're not allowing deposits or withdrawals, the compliance burdens are alleviated. And I'm sure Jordan can jump in on this as well. But, if you start out by working with a third-party digital asset custodian who may not be the same party that's filling the transactions being placed through the digital banking environment, you essentially outsource that compliance and that key management to a third party. So you don't have to take that burden on internally yourself, which is really essential, I think, for a lot of the smaller banks and credit unions across the U.S. To have an easier go-to-market solution, and then use that as a foundation to start thinking through what use cases might make sense to build on top of that. But keep in mind, when you're thinking about additional use cases beyond buy, sell, hold, you have to also move the technology in parallel with the compliance, the increased compliance expectations and regulatory environment that's going to coincide with that. So those three things really have to move together in order to bring more crypto native solutions that I think consumers are ultimately demanding to the banking environment.
Yeah. And I think, just kind of reading back what we're saying here, it all starts with how is a financial institution engaging with digital assets. Based on that path, there may be different requirements that need to be met, right? And so from Kian's point, if you start with a buy, sell, holds, there's going to be less than if you're enabling things like transfers. So funds being received and sent from counterparty wallets. Now, in those situations, as I was alluding to before, because of the nature of blockchain and because of the tooling in conjunction with the tooling available in the space, there are the solutions that are available to be able to send funds or receive funds from a counterparty and know what percent of this is tied to illicit activity, and more specifically, what kind of illicit activity. Right. So that's things like, what Chainalysis type solutions provide in this space. So it all depends on how you're going to go to market.
So
just to add,
go ahead. I'm sorry.
Just to add a bit on this, I think really what we're talking about is non-custodial versus custodial approach. And what that means is that, do you own the key as a user or not? If you think about people who are using Robinhood today, they have an account, you log into it, you have no idea what your private key is, you have no idea what your public key is, you don't even know what the assets are. Maybe you don't even own any assets. It's kind of like when you're doing a Venmo, right? You're sending virtual money, you don't even know who owns what. Maybe and I'm not saying what's happening, but maybe what Robinhood is doing with the cryptos they're owning is that they're staking it to someone else, right? So they can own money for you and then stake it to someone else to get a return on it. So in a way, it gives you an idea of what is non-custodial first level, which is the buy, sell, hold, being able to give that to your members or your customers, the capability to do it, to this through a third party, right? Meaning I don't own any key, I don't know anything, someone else is doing it for you, but I trust them, I created a level of trust and encryption, and I make sure that this is working in a very efficient way. And then there is a second level where, okay, I will own the key myself, meaning that I know exactly what private key you're using, and I can do some transfer and get more information around this, so I can start doing some staking, maybe lending, access to more capital. And then there is the highest level, which is, I don't know anything about the key, I'm giving it back to my customer, right? And that's where you can use like a MetaMask wallet, or you have to own your own wallet. I don't think people want that right now. I don't think any customer is like, I'm gonna hold my key, keep it on a USB key and store it in a bank, right? There is a few people doing it for cold storage, stuff like that. It's a very fringe user. But a lot of users want to be able to trade crypto without having to care about the key or the cryptographic around it. And that's where tools like non-custodial approach is extremely powerful for bank. And that's when they start taking over this custody, they can even do more and provide more for the customer, where they don't have to take care of the key. The bank would become a real crypto financial institution. And that comes with risk. And that's where Chainalysis would come in, or CryptoFi services would come in, or Finastra can help, right? Being able to make sure that we assess this risk, understand this risk, and report on them. And that's really where all of this come together. Level one non-custodial, getting access to custody, understanding the risk management.
So that actually, again, you've helped me out. You've segued into our next poll question. So, and I swear we did not plan this. This is just a really good webinar. So the poll question is, the third one, if you can bring it up, what is your biggest concern? And I'm curious here for folks who are watching this, what is the biggest concern that they might have? I mean, I know my biggest one, I think echoes, the discussion that Jesse had about price and volatility from a financial institution standpoint. I think that would be one of my bigger issues. But then again, from, I'm sure there may be something in terms of regulatory and compliance. So I'm kind of curious to see where we have some concerns. I'm going to give it another couple of seconds, and then I will end the poll. And while we're doing this, also, we'll remind everybody there is a Q&A tab at the bottom. If you have a question that you would like to submit, we are going to get some questions here in just a moment. So please submit those questions if you have anything that you would like to ask. All right, so I'm going to end the poll and share it. So it does look like the biggest one at this point by a little bit is regulatory and compliance. And I think that is going to be something that I don't know that we have dealt with as an industry enough yet, but I do think that at least here in the United States, I think a part of that has to do with just a lack of clarity on where things are going to be regulated. But it's clear from the discussion we've had to this point that there is a place for financial institutions, for credit unions and banks to play. Pierre, I think you mentioned that, the idea of a financial institution being that center of trust. So if there are folks who are now watching this from a credit union, from a bank, from a financial institution, Jesse, I'll throw it to you first. What's the next step? What do they do? Or Pierre, you're
just one comment, very quick comment that's really clear with this poll is adoption, right? If you had the same poll 2 years ago, people would be afraid of the price volatility. Now they're wondering about what can we do with it? What are the regulations?
Yeah,
we are really moving forward in it. Like volatility is not in the story anymore. We know it's a trusted technology. What can we do with it? How can we regulate it? Sorry.
One more just quick comment to piggyback on what we're saying about trust. I mean, I think timing is incredibly important to take advantage of the trust that a bank or credit union has with their customer, because we look at what just happened with Celsius, and anyone that is, trading or holding crypto on a third-party platform now is going to be concerned about, is that provider going to go belly up, and am I going to be able to access and get all my money back, if something happens? But, banks and credit unions don't have that issue. There is inherent trust there. And so being able to capitalize on that, amidst this environment, I think is just a great opportunity. But sorry, I know we're getting off topic here.
No, that's a great topic. I do think that's actually one of the really interesting things, though. And maybe it feeds into that next question of, okay, a financial institution says, yeah, this is a place we want to be. Our customers are asking for it. This is a product that we're interested in. What's the first step they should go? What should they do? I know my answer to the question, if you ask me, would be clearly on the education side, because it does go into things like trust, educating your consumers, knowing that at this point you may be a funding source for non-custodial exchange. So why are you letting that, why are those funds now going off out of your bank to go basically help somebody else? Why not do that internally? So I'm kind of curious, and I'll throw it to you, Jesse, first on, what's the first step?
I fully agree with you. It all starts with education, right? This isn't something you should jump into till you fully understand it. When we were talking about how educated is the industry earlier, something none of us mentioned is how educated are the boards, right? Like, especially on the credit union side, where we have volunteer boards that are usually cross-industry, sometimes made up of members. Typically, boards are getting better at being diverse, but one diversity category they aren't improving at is age diversity. So we've got a lot of older boards that don't necessarily understand this stuff. And so we've increasingly been doing a lot of board education. We talk to a lot of board of directors, take them through Crypto 101, let them understand what this is, why it matters, why is this something that you'll eventually be forced to be, adopting with, and this is really the digitization of money. And so the board education is a key part of education. And then once you've done that, it really becomes, doing your research, understanding what the right product strategy is for you. It's not the same for everyone, right? It's not going to be that everyone's offering the same buy, sell, hold solution to allow our members to trade Bitcoin. Some people, we've got one institution we're working with that's really interested in NFTs, and they really want to, they're partnered with a university that's very active in the NFT space for athletes and collectibles and things like that. And they want to be able to custody those NFTs. And so, what that product solution looks like is going to be very different for every institution. And then once you decide what it is that's right for you, it's all about understanding the different technology partners that are out there and choosing the right partner.
Interesting. So as some of those technology partners, I'm curious to hear, what the other advice might be. Let's say from a CryptoFi, Kian, what would be your advice if somebody came to you and said, yeah, this is something we want to engage in? You may be on mute.
Kian, we lost your audio.
No, so we'll go to you, Pierre, then, and then we'll come back to Kian.
Hear me? I think Kian is back.
Yep.
Yeah.
Go ahead,
Can you
Pierre.
hear me now?
Yeah, we can. We got
okay.
you, Kian. So we'll go to Pierre, and then we'll come back to you, Kian, and get your answer. So
That-
from a
that's good.
Finastra standpoint, what's the first step?
So I think past the education phase, which I think it's pretty clear that this is going through, there is a reassuring phase also, which is like, it's an easy way to get into the step one, right? The non-custodial approach is something that's very easy to set up, and really explaining the benefit on this. Not only like getting new people coming back to the bank or reassuring the existing people, but getting visibility on what's happening with the money. And I think when you have the first step of visibility, which is, again, I think a very easy way to do, because with financial software now being very geared towards open API and platformification, it's really easy to plug and play with other players. Make sure this is done in a safe way, make sure it's deployed in an efficient manner, and so on. So we have the tech stack that enables this to be driven forward quickly. And after, it's easy to increment and add new step, moving from the step one to buy, sell, hold to the step two to step three, and so on. So not only getting the foot through the door for themselves, but also understanding the journey that they're going in and the future benefit that you can get from there.
Excellent. All right, Kian. Yeah, we can hear you now. Go ahead. Uh-oh,
Our
he's
standpoint, I
disappeared
guess,
again.
Really,
It's back,
Now
it's
you're
back.
out. Now you're good.
am I good now?
Yep.
Okay, great. So, from our standpoint, I think it's really helping banks and credit unions understand the different players that need to be involved in an overall cryptocurrency program. And it starts with the technology. You have to have an elegant technology solution that is hopefully natively integrated into your existing banking software, both from an end user standpoint and from a back office standpoint. And then number two is, the liquidity aspect. How are these orders getting filled for the retail buy, sell, hold use case? And then also, what does that conversion process look like from a corporate use case if you're accepting crypto as a payment and then auto converting that? So having the right partner there to make sure you're getting best in class, quote unquote, exchange rates for the on ramps and off ramps of crypto is incredibly important. And then number three, which we talked about a lot already, is the custodial model. A lot of banks and credit unions are likely going to turn third party to start, but giving yourself flexibility to be able to bring custody back in house is going to be important, because eventually I think a lot of banks and credit unions are going to realize that there is a ton of value from self-custodying digital assets or custodying the digital assets on behalf of the members or customers directly versus using a third party. And so making sure that from the get-go, you have some flexibility in your solutions to be able to adapt to an evolving market need, and based on what that strategy looks like, the compliance component is going to tie in as well. And I think that's where, Jordan really comes into play. So.
Right. And that's why I kind of left Jordan, you to the end of this, because I tend to think about Chainalysis as maybe not the first vendor that somebody would come to when they're thinking about this. And maybe that's a mistake. In other words, this might be something from a risk and compliance standpoint, they should be engaging with you further upstream or earlier in the discussion. So curious what you would say to a financial institution who says, hey, this is something we want to do. What would be your advice on what's the first step?
Yeah, I just, theme of the day is starting with education, right? So once you understand what's the pursuit or the opportunity you're really trying to seize as it relates to digital assets, you're thinking about then what are the core infrastructure pieces that we need, and often figuring out how to be able to custody funds is something that's going to come up really early on, right? But in parallel, it's important to be understanding, what are the other technologies we need from a compliance perspective that help with BSA, AML types of requirements. And that's where, helping, a company like Chainalysis would come into play. And of course, it's still a pretty small ecosystem. There's a lot of partnerships and integrations between different tech stacks, right? So there's always a benefit to engaging with providers that are covering different use cases to get a more holistic approach, right? And then there's other like niche types of things that help with maybe travel rule or market surveillance that come into the fold as well. So it's important to start that engagement, educate yourself, and I would respond to make sure that you're doing those things in parallel to move efficiently and quickly.
Okay, so we're getting close to about 15 till. So I want to get some of the questions that have been asked in our Q&A. And again, if you do have any questions, please put them in the Q&A tab. But one of them is Bitcoin enough? Can banks and credit unions get away with just offering Bitcoin to their members? Why is Ethereum or other tokens important? So I'll take that because I think it's a really important one, and kind of expand it to, is it enough? I mean, from a crypto product standpoint, are financial institutions that just offer buy, sell, hold for Bitcoin enough, or do you end up with like, the exchanges that have hundreds of coins? Curious to know, is Bitcoin enough, or is there more that financial institutions need to be offering in terms of access to coins and crypto and digital assets, and maybe even stable coins?
I'll kick it off. Sorry, go ahead, Kian.
I think we have very strong opinions about that here at CryptoFi. Bitcoin is great, but objectively, the trading volume of Bitcoin and the overall market cap is, not anywhere close to being 100% of the overarching volume. So giving choice and access to your customers and your members to use other coins with the caveat of, ensuring that you understand the, risk, compliance, and regulatory considerations around them, like is it defined as a commodity or security, is really important. But I think it's pretty clear that Ethereum sits alongside Bitcoin as being definitively categorized as a non-security commodity. But setting yourself up to work with partners that can support other coins as well besides just Bitcoin and Ethereum is probably a good idea, because I think we will see more regulatory clarity on the other coins, as time goes on. Just last point, I don't think banks and credit unions will ever need to offer as many coins as say a Coinbase does. Like there doesn't need to be hundreds of coins listed in a banking app, for example. But having more choice than just Bitcoin, I think, will be important, especially because it's still very much early days, and it remains to be seen how the battle between Bitcoin and everything else plays out. But
so you think that becomes a differentiator on financial institutions as far as what they're offering access to?
Absolutely.
Okay, interesting.
And James, if you don't mind, let me just piggyback on it too. So first of all, totally agreed. Bitcoin in itself will not be enough, right? It's, as Kian pointed out, it's not nearly close to 100% of the market cap for digital assets. And one may ask why, right? Well, you have all of these different layer one blockchains, Ethereum being the second biggest. And because of capabilities of some of these things, such as smart contracts, that enables all these other use cases that we've highlighted briefly around DeFi and other things. So those networks, that utility that comes from those networks will grow over time. And it'll be really important to have a proper roadmap of what wants to be supported and why, because it will be a competitive differentiator. And to also expand on the point about, staying abreast of most recent regulatory policy updates is going to be very important. You might have saw the SEC chairman, Gary Gensler, recently said that most tokens will be securities from his perspective, right? So it's important to, stay up to date on this, and goes back to education, engagement. So just want to expand a little bit on that point.
So that leads into a really good question we got on the Q&A as well. Various blockchains provide different use case potentials. What resources are available to figure out the functional focus of the various blockchains and evaluation criteria? Thank you for that question. I'm going to expand it a little bit more because I think we're coming to the end of this, and I think it's a really good question. Basically, how do you look at these various blockchains, the various layer ones, and evaluate them? Where are you learning about those things? I mean, my selfish answer would be go ask an analyst, but I'm the analyst, so I would love for people to ask those questions. But a good way to end this is where do people go to learn about these things? Where do you guys learn about, evaluating the various layer ones or what's happening? So again, I'll do what I did at the very beginning and start with Kian and go to Jesse and then Pierre and then Jordan, end with you. Where are you learning about these things? Where are you getting additional information?
So I subscribe to CoinDesk where I get a lot of my crypto news from, but I'll make a sort of a different point here. I think education is not only important for the bankers themselves, but I would argue it's more important for their customers and the credit union members. And so making sure that you're providing education, for the customers you're offering in crypto to, I think is really important. So as you're thinking about your strategy, I think that should go alongside everything else that you're thinking about as it relates to crypto. So.
Good point.
And I'll give a plug for Kian and CryptoFi on that one. I think one feature that is unique about CryptoFi that I really like is the ability to offer education for types of coins that the institution has not yet offered yet for trading. So if you launch and you have Bitcoin and Ethereum, you can have educational articles for another 30 to 100 different coins, and you can monitor how many clicks those are getting. And so that will give you some clue to the demand side of the equation. I think when deciding what to offer, it's a mix of the regulatory side of the equation and demand side of the equation. And so that's going to help you answer the demand side. The regulatory side, I think, unfortunately, we need to let the regulators do their jobs and tell us what we can do and set those guardrails. And I think it's a big question today, and we see lots of going back and forth between the CFTC and the SEC, and both of them think they should control it. But I do think that's something that will be ironed out sooner rather than later. And I think I think 6 months from now, if we had the same webinar, there won't be so much gray area as exists today. I think it's being worked on today. It is a focus point in Congress and other regulatory bodies. And so I do think that we are getting to the point where in the next few months, we are going to have that clarity. But until then, I think it is a gray area, and we are a little bit in wait and see mode to see how that all shakes out.
Let's hope that's the case. It's only a few months. Pierre, your answer as far as where are you evaluating and learning things?
I think it's Jesse gave a very good point, which is what if we just treat crypto as an investment? That's the first step, right? If you treat it as an investment, do I need all the coin? Probably not. When you offer investment, you don't give all the ETFs that exist in the world, the mutual fund. You found the ones that are relevant for your target audience, right? So I think learning on what will be the most important one for your target audience makes sense. Another thing, to go back on the Ethereum versus Bitcoin and so on, this is a very different purpose, right? There is no smart contract or any kind of DeFi related on Bitcoin, right? DeFi and execution of the chain, something that were completely added by Ethereum, and you have more optimized one like Solana and so on that are coming in, right? So depending on what you want to do, if you treat it as pure investment, identify the coins that are relevant for your target base. If you want to go into more advanced use case, whether it's lending or using some decentralized exchange like SushiSwap or Compound to be able to like trade some money, or even CBDC, right? Or any kind of stable coin, this is another space, right? It's a smart contract running on a specific technology. And we talked about layer one, which is basically the existing coin. Layer two is capability to trade for I would say a lower amount of money, because right now the gas fee or the fee to exchange could be very high. All those need to be taken into account. So it goes to your question, James, like, but where do I learn about all this? Well, you can talk to, if you're using Finastra product, talk to your self-representative, because we have a lot of experts in-house, but also you can educate yourself by just looking at different technology that you think are relevant for you. Think about the platform that you have. Start from the tech, educate yourself with what's around it, and understand the use case that would be relevant for you. In the topic we had earlier, I don't know 20% of the use case. I don't know how to use it. I don't know what to do with it. Investment, higher usage, smart contract, maybe cross-border payment, all do stack on each other. So unpeel the onion layer by layer by learning exactly what makes sense for your constituent and how you can move forward on the stack. Does that make sense?
Excellent. That's a great answer. And Jordan, throw the last answer to you as far as where you're looking, where Chainalysis is looking for additional information and learning more about layer ones and crypto in general.
Well, for me, Twitter. Now, there are so many different resources out there for great content. For me personally, engaging and reading in different articles, listening up. There's a lot of great podcasts out there. My best education comes from, back to what I was saying, with actual engagement with the ecosystem. All of those things help support that. From a Chainalysis perspective, when we think about our technology and what we provide and how do we think about asset support for our tools, we pay attention to the actual economic activity happening on chains, right? How much economic activity is moving, how much development is happening on those chains, right? These are all evolving things with evolving capabilities and features. So those different factors, it's kind of back to what Pierre was saying. You got to peel it back layer by layer, understand the different the technology platforms you're looking at, and then through that research, it'll help provide a clearer picture of what makes sense to support versus not.
I think that's a very good place for us to end. Hopefully we have provided some of the information that folks on the webinar are needing too, in terms of education and learning about what's going on. I just want to say thank you very much, Jordan, Pierre, Jesse, Kian. Thanks for being a great panelist and for really, really good information. And thanks to CryptoFi for inviting me to moderate this. Again, I believe there will be an email to those folks who have registered that they can access the archived version of this. And with that, I will say thank you very much and bid everybody a good day.
Thank you.
Thanks, everyone.
Thank you.